Welcome! In the session today, we're going to be talking about how you can use a client-friendly financial planning platform to help grow your business. Now in the session, we're going to do a quick introduction. We're going to talk about what is client-friendly financial planning. I'm going to give you a few examples of how you can use a client-friendly financial planning platform to help grow your business. I'm going to give you a quick platform demo, and then at the end, I've got a special offer for you. Now, my name is Owen Winkelmullen. I'm a certified financial planner, a CFP, and I founded planeasy.ca, an advice-only financial planning practice that I founded in 2018. Now, through Planeasy, we've developed a client-friendly financial planning platform between 2020 and 2023, and now we've made that platform available to other advisors as a white-labeled solution through Adviice. Now, through the platform, we've been able to generate nearly $1 million in advice-only financial planning revenue, and over the last couple of years, we've had hundreds of client engagements. Now, what is client-friendly financial planning? It is a revolutionary way to engage new clients, to collaborate with your current clients, to enhance your value proposition, to create more trust with your clients, and to build deeper relationships. Now, this type of collaboration is the future of financial planning, and the US is a little bit ahead of us on this. 47% of the advisors in the US are already providing collaborative financial planning services. And it's just a matter of time before this type of financial planning comes to Canada as well. Now, old financial planning software was a bit clunky. It was pretty much an advisor-only tool. There might have been a portion that the client could access, but for the most part, it was the advisor gathering documents and data, inputting it tediously into the software, and then creating a PDF financial plan to share with the client. Now, this type of financial planning was slow, it was very inefficient, and it sometimes meant that the advisor needed a team of people to help create financial plans, manage client information, documents, and data. Now, a client-friendly financial planning platform is way more efficient. It puts the client in direct contact with the platform as well as the advisor. The advisor and the client can work collaboratively to build a financial plan, and the advisor can work together with the client on the platform to craft that plan and to create something together. Now, this type of collaborative planning is more interactive, especially when compared to a static written plan. Kitsy says that it results in more frequent plan updates and can potentially increase client engagement and improve client retention. Now, imagine having a platform that can immediately engage new prospective clients. And imagine having a platform that clients rave to their friends and family about and the incredible value that you provide. Imagine having clients that constantly refer more amazing clients to you because of the amazing experience that they've had. This is the power of a client-friendly financial planning platform. Now, I'm going to show you three ways that you can grow your business with a client-friendly platform. And the first way is that you can just engage more clients. With a client-facing platform that's client-friendly, you can reduce the friction between and generate more leads. So between a client landing on your website or social media, they can immediately sign up for an account on the platform. And because it's white labeled, it's a seamless experience for those clients. So they can sign up to the platform and immediately get access with a free trial. And in that free trial, they can start adding documents and data and generate these types of visuals in terms of cash flow diagrams and other projections. So it creates an interesting way to capture prospective client information, to deliver customized email sequences based on that information, and to nurture prospective clients so that when they come to that intro or discovery call, they're pretty much sold on the incredible value that you can provide as an advisor. Imagine going to an intro or discovery call with a client, and the client is pretty much asking you, how can I get started? What do we do next? What are the next steps? That is the power of a client-friendly financial planning platform. Now, the second way that you can use a client-friendly financial planning platform to grow your business is you can deliver more value in less time. So you can reduce the time it takes to create a financial plan from what used to be hours to as little as minutes. Now, the key here is with a client-friendly platform, clients are entering data onto the platform directly. Clients are uploading documents. It's simple and easy to understand, both for the client and for the advisor. It has a very specific and easy to understand flow of information, And the advisor really is only doing the value-added work. The client's entering their documents and data, and the advisor is really coming in and fine-tuning that information and identifying potential opportunities and risks. This helps because it increases client engagement and trust. The client gets to see the whole process from start to finish, and they know how their data is being used to generate a financial plan. It makes the process very transparent. They get to see every step of the financial planning process, and it enhances clients' understanding of their current financial situation. You can identify gaps in their understanding and knowledge and help fill those gaps with your own expertise. And finally, it improves the client's financial clarity and peace of mind. And ultimately, that's what's going to lead to more referrals in the future. And that's the third way that you can use a client-friendly financial planning platform to help grow your business. You can use it to generate more referrals, providing clients with a very unique experience that they can share with their friends and family. So you can build deeper relationships with your clients, you can create more peace of mind, and you can provide your clients with a unique experience that they can talk to their friends, family, and coworkers about. Now, this helps because it makes it much easier to refer a friend or a family. A friend or a family, they're not being asked to book a call with you. What they're being asked to do is just go start a financial plan. You get a free trial. And the benefit of referring clients is that referred clients are actually 4 times more likely to refer more clients in the future. So by generating and cultivating client referrals with a unique experience, you can actually create a flywheel in your business that helps generate more referrals in the future. Now, let's take a quick look at the platform. I'm going to take you through a quick demo of some of the key features and benefits. Let's take a look. Okay, let's start the demo as a new client. Let's say that Jessica here has landed on our website or social media and now has been directed to sign up for an account on the platform. Now, the first thing you'll notice is that you can brand the entire platform. So you can brand it with your own colors, logo, and business name. The domain can be white labeled as well. And so the entire platform looks like your financial planning platform. It also provides a seamless experience for clients. So they go from your website or social media directly over to the platform, and it looks like a seamless experience for the client. So here, Jessica, we're going to sign up for an account, and we're going to say that Jessica is preparing for retirement. So already we get a sense of what Jessica's goals are for a financial plan. So let's get started. Okay, so the first thing we're going to do is we're just going to confirm Jessica's email address. Now, the first step is that we're going to complete a quick set of onboarding questions. So these questions help give us a structure to Jessica's financial situation, and it helps us give us more information about Jessica's goals and where she's going and what she wants to get out of a financial plan. So I'm going to take a couple minutes and I'm going to fill this out, and then we're going to go on to the next step of getting onto the platform and starting our free trial. Okay, so I'm going to submit this and we're going to get into the platform itself. Great, so now that we're on the platform, the first thing you'll notice is that you can embed your calendar directly onto the platform. So this is great, so you can have Jessica book a discovery call right away, or you can give Jessica a free trial to explore the platform. There's a few things you'll notice already on the left is that the platform is laid out linearly, so we start with a discovery phase. We're gathering facts and information. We've got a foundation phase where we're talking about best practices, looking for risks and opportunities. And then all of the information flows into our planning phase where we're doing projections, we have a summary, a report, implementation actions, and tracking. You'll also notice that we have a payment section here on the platform. We'll talk about that a little bit later as well. You can also add a sample plan for prospective clients to review. Some of the benefits to this is that it is extremely low friction. You can get clients that sign up at 2 a.m. If they're worried up late about their finances, they kind of stumble onto your website or social media. You can capture those leads at any time of the day, even if you're asleep. It's extremely low friction and it gathers a lot of information. So you can get a lot of information from the client during that sign up process. And some advisors are getting 1 to 2 new prospects per day. You can also use this for follow-up marketing. So you can use our external API to connect to a CRM or email marketing platform. And you can send those clients, those prospective clients, follow-up emails, nurturing emails before they actually book a discovery call or intro call with you. Okay, so the next thing I want to show you is the discovery phase. So we'll go a little bit deeper on how the discovery phase can help you gather client information directly from the client, including document uploads. Now, this discovery phase is tailored to each and every client. So from the client's profile, from that initial set of onboarding questions, the platform will automatically tailor the discovery phase. So the client only sees questions and information that's related to their specific situation. So this makes it more of a fill-in-the-blank exercise for the client. And because of these interactive charts, so this Sankey diagram, this cash flow diagram, it gets generated automatically as the client enters income and expenses. So this provides instant feedback for the client and kind of encourages and pushes them along to add more and more information. Now, the platform does highlight discrepancies in their cash flow, so this again provides them with a bit of instant feedback without the advisor or the planner even needing to be involved at all. Now, these type of diagrams, they get generated automatically. The client can enter their information around insurance, assets, and debts, and they can even upload documents directly to the platform. So it's extremely easy to do. All they have to do is click on an icon, they can upload a document, and the platform is mobile friendly. So if Jessica wanted to sign in from a phone, a tablet, a laptop, she could sign up on any device and be able to upload pictures, PDFs, or files directly to the platform. So this is great because it keeps everything in one place. We've got all of the client information, data, information in the discovery phase, as well as all of the key documents that they wanted to share with us. And it's very easy for them to do. They can see which documents are missing, which ones they've uploaded, what type of document, and when that document was uploaded. This is also great if you're doing plan updates year over year. You can see which documents are old versus which documents are new. Now, the benefit to this type of client-led discovery is that it can save you hours of manual data entry. It can save you lots of time from not having to gather that information directly from the client. And it can really engage clients in the process itself. So clients often tell us, what a great exercise that was for them to go through their income and expenses or to gather their information around assets or debts. And it also helps you identify gaps in the client's knowledge and understanding. So sometimes pension information or insurance information, the information that the clients added might have gaps, and that lets you fill those gaps in their knowledge as an expert advisor. So not only is the platform helping you save time, but it's also helping the client and identifying what information the client has and what information the client maybe needs to understand a little bit better. Okay, so the next thing I want to show you is the foundation phase. So after the client has entered all of their data and you've sort of double checked it to make sure it all looks accurate and correct, all of that data then flows seamlessly into the next phases of the platform, and that's the foundation phase. So in the foundation phase, we start to talk about best practices, future risks and opportunities, and forward-looking assumptions. So a good example that I want to show you is the debt payoff plan. So here you can add value beyond just your typical financial planning projection for clients with multiple types of debt, maybe higher interest debt, or maybe a higher interest mortgage at the moment. You can help them understand the different ways to pay off debt and how that might affect their long-term financial plan. So here, Jessica has a bit of credit card debt on a MasterCard and a Visa, a vehicle loan at a bit of a higher interest rate, a mortgage rate which has gone up, and a HELOC as well. And so here, if we look at the extra monthly payment that Jessica's already doing, $100 a month, it's going to lead to about $144,000 in interest payments. But we know that Jessica has some additional cash flow that she could maybe use to pay off these debts a bit faster. So instead of $100 a month, we know that Jessica could maybe boost that up to $500 a month, and we're going to see what that can do in terms of debt payoff. So we can recalculate this, and all of a sudden, instead of $140,000 plus in interest, we're down to $113,000. We're also maybe potentially paying off those debts a little bit faster. Now we can also test different approaches to paying off debt. So here we've gone with the highest interest first approach, the avalanche, but we could also look at the snowball approach. So here we can recalculate and see what that does to overall interest. We can also see if any of these debts get paid off faster. So here we've got our total balance, but here we've got our payments. We can kind of see the Visa gets paid off around the same time as the MasterCard. So let's see if we can maybe pay off one of those debts a little bit faster. And we can. So similar interest payments, a little bit higher, but now Jessica can pay that MasterCard off if we put everything against the MasterCard by February 2024. So slightly smaller debt, maybe that's the priority. Give Jessica a little bit of boost in confidence, and then we can focus all of that cash flow now against the visa. So the platform's doing this for you automatically. Once you've got that information from the discovery phase, this becomes incredibly simple to do with a client. And it's great because now Jessica will have more cash flow for other goals like insurance or investing in the future. So we've got the MasterCard being paid off, then we've got the visa being paid off. The platform's automatically putting that money towards the vehicle loan, and then the final debt to be paid off is the home equity line of credit. And overall, by the time we get to November 2026, Jessica's only debt remaining is going to be her mortgage. So that's one of the first interesting ways to use the platform beyond just your typical financial planning projection. Now, the other way I want to show you is the CPP and OAS estimate. So within the platform, we've built in a CPP and OAS estimate that's extremely accurate, within a few dollars per month of actual CPP benefits. And to do this, we get the client to enter their statement of contributions and future income assumptions. So here we're actually calculating the future CPP benefit for Jessica, including CPP enhancement, and it's including the dropout years as well. So we can talk to Jessica about the potential headwind of delaying CPP from 60 to 65 due to the additional zero earning years that she'll incur by delaying CPP start age. So we, in this case, we're saying Jessica might want to start CPP at 65 and old age security at 65, but we can talk about the different financial planning opportunities around CPP and OAS start age. Now, the last thing I want to show you is the tax and benefits analysis. So the platform obviously is looking at marginal tax rates, our tax calculations are a full T1 tax return. So we're doing extremely accurate tax calculations. And we're not only doing that, though, we're also looking at government benefits as well. So within the platform, we built in government benefits like the Guaranteed Income Supplement, GIS allowance, the Canada Child Benefit, as well as provincial child benefits as well. So not only are we mapping out the marginal tax rates here, so in Ontario, you're earning $250,000 a year, you're at a 53% tax rate, but we're also mapping out where government benefit clawbacks are. So these sort of income-tested government benefits are adding to a client's effective tax rate. So here, Jessica, if she was earning $114,000 a year, even though her marginal income tax rate might be 43%, her effective tax rate when we include the Canada Child Benefit clawback is actually closer to 49%. So overall, Jessica's effective tax rate is close to 50%. And if she was earning $114,000 a year, that would certainly make RSP contributions extremely attractive. So we can start to do some very interesting TFSA and RSP planning around effective tax rate rather than just marginal tax rates. So some of the benefits of including this type of analysis on the platform is that you get to highlight for the client opportunities and best practices. You get to have that discussion with the client, and the client's already seeing some of that information on the platform themselves. You also get to show off your value and expertise as an advisor. So you get to show them tax planning opportunities, government benefit planning opportunities, different ways to pay off debt, and that's just the start. You can also identify potential risks early on, and you can break that news gently. So you can maybe identify risks around paying off debt, tax planning, or potentially future income and expenses. Now, there's lots of other tools on the platform, lots of other analysis that I could share, but those are just some of the key highlights in that foundation phase. Okay, now the next thing I want to show you on the platform is what I think is probably the most exciting feature on the platform itself. And remember, the entire platform is client-friendly, client-facing. So all of what you're seeing, the client can also interact with as well. So you and the client are really working collaboratively to build this financial plan. So when we get into the planning projections phase, all of these projections run instantly on the platform. And that includes success rate, so stress testing the drawdown in retirement, as well as the entire projection. Now here, I've switched over to a different account. So we've got Michael and Ashley, and what we're going to do is we're going to help them optimize their financial plan using our AI strategies. And this is really exciting. So every time we're going to recalculate the plan, our AI cluster is going to immediately identify new opportunities for us to take a look at. So let's get started. So here we've got a situation where they're ending with a net worth of about 610,000. Their success rate is okay, 56%, but not great. So there's about 44% chance that Ashley and Michael are going to have to make some sort of a spending change in retirement if they want to avoid running out of money. Now, what we want to do is we want to help them create a more robust and a more successful retirement plan. So we're going to look at a couple strategies that might make that possible. Now, it's already calculated here, but we're going to recalculate it here in real time. So we're going to let the plan recalculate, and immediately the AI cluster is going to be looking for strategies for us to explore, and it's going to rank that by net worth. We could also rank that by the success rate as well. So already here we can see that starting CPP at age 70 is probably a better choice for Michael. So Michael's our primary client. We had CPP starting at age 60, but what we're going to do is we're going to go back here to foundation, and we're going to change this to age 70 for Michael. So we're going to recalculate that. And when we go back here to projections, the financial plan is going to recalculate, but immediately we're going to start looking for new opportunities again. So the AI cluster is now finding new opportunities. We're at that 816,000 in total net worth, and we're going to see whether or not there are any additional opportunities that we want to explore. So already here we've got another opportunity. So for secondary, so for Ashley, we want to start CPP at age 70. And this is going to boost their net worth considerably. So they're going from 800,000 to almost $1 million in net worth. And part of what's happening is the platform's identified that there are some non-taxable government benefits available if they implement these strategies. So GIS allowance, these types of government benefits are built directly into the platform and let you do some very complex planning, and our AI cluster can help identify these opportunities. So let's implement that. Right now they're ending with a net worth of 816,000. The AI suggests that we can get to over $1 million. Let's go over here and change Ashley's start age to age 70. So we're going to do that. And now we're going to let the plan calculate, and the AI cluster is going to, again, look for new opportunities. So here are the plans at that $1 million, 27,000 that we had identified. And now it's looking for new opportunities. Seems around RSP to RIF conversion. So it seems for Michael, we want to convert the RSP to a RIF at age 64. And it doesn't seem to really matter exactly when we do it, whether or not it's 61, 64, 65. And I suspect this is pretty much because Michael's going to have income splitting after age 65 if we convert that RSP to a RIF, as well as maybe the pension income tax credit. So let's go ahead and do that down here. So we're going to do 65 because all of those values were the same benefit. And we're going to recalculate to see what's the new opportunity that the AI cluster is going to identify. So overall net worth, $1,059,000. And that pretty much looks like it's it. We're at the top here. There are no new opportunities. That is the best one at the moment. And so we've gone from, I think it was $600,000-$700,000. We're now at over $1 million in net worth by the end of the plan. Let's take a look at success rate. So we've gone up from about 56% to 70%. There is still 30% chance that Michael and Ashley would have to change their spending in retirement. But with this, we've potentially got more money in the future if they get some average or above average investment returns. And now we can see the difference here. So if we re-rank these strategies by lowest net worth, we have CPP at age 60, which was our initial starting assumptions, with an overall net worth of $730,000. And with our top strategies, we're at $1,060,000 almost in total net worth. So we've added $300,000 plus. just through a few clicks and running these AI strategies. Now, the benefit here, as you just saw, is that we can deliver incredible value in just seconds. You can also get your clients excited about financial planning, and this excitement can lead to more referrals. So having your client involved in the financial planning process, seeing the power of the tools in the financial planning process in real time, lets you generate more referrals from those clients in the future. And you can really see how the combination of a client-friendly financial planning platform that lets you gather, information, documents directly from the client, coupled with, AI strategies and the AI cluster and the instant financial planning, how the combination of those two can help you create a financial plan, something that used to take hours in just a few minutes. Now, I think this really highlights the value of the advice that we provide as financial planners and advisors. And to drive this home, I really want to talk about how much clients are paying for financial planning. So fee-only, advice-only planners like myself, we're charging between $2,500 and $5,000 for a financial plan. And if we can deliver a financial plan to 100 clients per year, that means that we're generating for our clients anywhere from $250,000 to $500,000 of value every year that we're creating. So we're creating an immense amount of value by being able to provide financial planning to each and every one of our clients. And a client-friendly financial planning platform with the power of AI can really make that very easy to do. Now, I know you probably have a few questions, so I'm going to cover some of our frequently asked questions here. And one of those is always, where is your data stored? Now, all of our data is stored in Canada in our cloud infrastructure. So we're using Amazon Web Services, and we're using specifically their Montreal data center. So all of our data, client data, is stored in Canada, secure, encrypted in AWS. And of course, what type of security do you provide? All of the data is secured in transit and at rest using industry standard 256-bit encryption. So we're leveraging Amazon Web Services, AWS, and all of their great security and encryption features. Now, do we have multiple factor authentication or 2FA? We do. It is mandatory for advisors on the platform, and it can also be enabled for your clients as well. So you can enable it for each of your clients if that's something that you want to do. Are there any long-term commitments? No. So Adviice is available on a month-to-month basis, and we are so sure that you'll love the platform that we have no requirement for a long-term commitment. Can I customize the platform for my business? Absolutely. So you can customize the platform with your own domain, your own branding, your own logo, your own colors, automatic emails, embedded calendars, your own custom reports and recommendations. There is a lot you can do with the Adviice platform to customize it for your business and your clients. Now, thank you so much for watching this session. I hope you found it very informative. I hope that you do create a free trial account. I hope you reach out to us for an intro or a demo call, and I hope that we can help you grow your business.